Hi traders, welcome to Elite Currency. My name is Chris, and this video is taking a look at the euro dollar and pound dollar in the last day of April before we take, of course, a review of the monthly candle in April. Next video we'll do that, but we'll take a look at the long-term perspective already. Right now, euro dollar made an interesting break to the downside, so let's take a look. Alright, this is the euro dollar daily chart, and boy did we get a push to the downside that went even beyond the support level that I thought would stop price, because I thought this was a wave 4, or this is a wave 4. I thought due to this pattern, right, price going sideways after a decent momentum to the upside, and it looked like an ABC and another ABC, and that we're building another ABC. Alright, now this is starting to become less likely due to this bearish break. If we put a fib on the wave A that I expected was a wave A, price did suspiciously bounce off a minus 61.8 fib. So I wouldn't rule out a wave 4 scenario entirely. Price also managed to get to the long-term moving average. And if you put a fib from this bottom to this top, all right, then price still stopped at the 61.8 fib. Now, I don't think that the wave 4 is the most likely pattern at this moment. I'm talking about this wave 4, wave 1, 2, 3, 4, 5, but I wouldn't rule it out either. And I think it's still an option. I think it's still possible. It really would get fully invalidated when price breaks below the top of wave 1, which is here. And of course, a break below the 61.8 fib makes it less likely. Even a break below the 50 fib makes it less likely, basically. So this is kind of a gray zone area right here, where probably a different wave count makes more sense, but it's not fully invalidated. It is possible that price will rally here, make a correction, and still make a wave 5. But in the meantime, let's take a look at other scenarios that are perhaps more likely. This could have completed the fifth wave right here on this top. This could have been a wave 1, up and went for a wave 2, and we're now in a wave 3 in a bigger reversal. What kind of reversal? Let's take a look at the higher time frames. There we go. Basically, this looks like a wave 1, 2, 3, 4, 5 to complete a bigger wave A, and now we're going to retrace for a wave B. This could be the start of that wave B. This could be a wave 3 of the wave A, for instance, of a bigger ABC that could take place within the green wave B. All right, so that particular motion would be like this: wave 3, wave 4, wave 5 to finish wave A. Up it goes 3 waves for wave B, then another 5 waves, and we'll finish wave green wave B and go up again. Something like that would be expected. All right, so how far could this first wave A go? We'll put a fib from the very bottom to the very top, and well, price could basically stop at the 38.2 fib, for instance, right here. And the main target could be the 50 or the 61.8 fib for the wave C of the wave B. All right. Once again, A, B, C within the bigger A, B, like this. All right. So how do we know if this is indeed developing a wave 3 momentum? And whether indeed this potential wave 4, right, 1, 2, 3, 4, 5, within the bigger wave 5 is over or not. It all depends on how price will respond basically in this resistance zone, right? If this is a wave 3, we would expect price to be making an expansion, so wave 1, 2, 3, 4, 5. So we'll put a fib from here to here, like this. All right. And price typically should not go more than the 38.50 fib. 23.6 fib could also be a turning spot. So as long as price stays below these fibs, this could easily be a wave 4. Down it goes for a wave 5. And that could complete a bigger wave 3. And we might get one more wave 4, and then a wave 5, and then one more wave 4, and one more wave 5. And we might be doing this down to that main target I talked about at 117. All right, that would finish wave A. Now, if price breaks above the 50 fib at 122.25, because there are a lot of bottoms in here, there's a long-term moving average, there's some tops and bottoms in here too, then depending on the pattern that unfolds, we would basically expect kind of a rising wedge. It all depends on the patterns that will arrive and how price approaches this resistance zone. If there's a rising wedge, if there's a bear flag, if there's a triangle, all those things make the chart bearish, and a break of those patterns should see a continuation to the downside. If price, however, develops 5 waves to the upside, like this, makes a correction, makes upside, makes a flag, makes upside, then we got to be careful with the upside. With the downside. And it's actually could indicate that the old wave 4 scenario might become more likely again, right? So I know that there are a lot of bears that are now celebrating, let's say, and in the sense that their analysis was correct, and I can imagine, and I agree with them that that is now the most likely kind of scenario. But I wouldn't totally rule out the upside still. It depends on the patterns that unfold as for price, and whether price respects this region or not. If it doesn't, and there's bullish patterns, it could still be a very, very kind of deep wave 4 pullback, and we might still get that wave 5, right? However, if we get the correction to the 50 fib and then we get a drop, then of course it is obviously not in that wave 4 anymore. That would be the final blow to that bullish scenario, and then this is not a wave 4 consolidation anymore for sure, and this was probably the wave 1, wave 2, and now we're going for wave 3. So that's key, I think, for the moment. Also, if we get a lower low like this, then this bottom will become important, because that would be the wave 1, 2, 3, 4, 5, like this. All right, so we might get basically a bounce, a lower low, a bounce, a lower low, all the way down to that 117. All right, if price does break above these levels with good momentum, either right away or after a pullback in 5 waves up, then we might expect a new breakout to the upside. So that's about it for the euro dollar. Let's move over to the pound dollar. This is looking more bearish, obviously, even more so than the euro dollar, although euro dollar made a significant downside bearish move. Pound dollar even more so, and at least the last few days. And you can see price basically in a wave 1, I think, and whether that wave 1 is finished, I'm not sure. Last week I said price is at 140, but we might not get any retracement. It might just break and continue. That's basically more or less what it did. It went to 140.20 and just continued lower. So this is looking like a bearish break of, definitely a bearish break of this trend line, obviously now solidified. And I think that there's a good chance that price might continue for one more push lower, but eventually I think there will be a retracement. Let's put a fib from maybe from here to here for a second. Let's see. Let me use a smaller time frame for that. But in any case, let's take a look at daily chart perhaps. This could be a support zone, basically in general, 135, 137. Right, so I wouldn't be surprised if price still makes one more lower low, retracement continued, but eventually a 3-wave correction, an ABC of some type, back to the long to moving average, short to moving averages, and then a continuation of this downtrend, I think, is likely. But it doesn't have to mean that the retracement happens right away at the beginning of next week. It could be after a small consolidation and continuation. All right, why? This could be a wave 1, this could be a wave 2. This could have been a wave 3, 4, and we're in a wave 5. But if you look at the hourly chart, this could easily be a wave 1, 2, 3, 4, 5, right? So if we put a fib from here to here, excuse me, then we will basically, sorry, I didn't manage to, let me do that again, from here to here. Basically, any of these two fibs, right, and the moving averages could finish that wave 4, and down it goes for one more wave 5, right, 138.40-ish, 138.20-ish, down to maybe 137, maybe even further, who knows. There's a lot of bearish pressure, maybe even to further targets. But most likely target is the minus 272 target around 137, which then could possibly create a bounce, unless this is way more extended than I imagine, which is always possible. So, but for the moment, I think a bounce from here is likely. If it breaks above 138.60/139, then obviously something else is going on, and we might be having the bigger retracement sooner than I expect. All right, more free analysis at elitecurrency.com. Wish you all great trading and see you soon. Cheers.